Good morning, traders. Good morning, investors. Ken here from the Dyslexic Investor, and it's just a little bit after 5 in the morning here on the east coast here, and we are currently limit down in the futures. So what does limit down means is basically we're hit the limit in the trading, meaning that we're down more than 5%. So there was a enormous amount of selling due to whatever factors. You can see here, this is basically, so the futures are basically what trades overnight and things like that. So when we opened up yesterday, basically around 6 Eastern Standard Time, we just came crashing down, and we continue to come down, and then basically hitting the limit of just like, hey, we can no longer trade. All the bids and asks are halted, and we can no longer go up or down until the market opens. This sometimes significantly shows a potential bounce or substantial higher volumes of selling. Because I think the last time we had limit down was due to the 2016 election. That could be, and that really had a bounce because it was the ongoing onslaught with Trump and Hillary, and that kind of markets turned and enjoyed that the President Trump that became president. So the reasons this time are a little bit different. There's going to be a lot more fear-based. By overall world fear-based is basically crude prices hitting nearly 30-year lows. You have the overall keep on going on virus. A lot of people are locked down, quarantined. So many people are not being able to buy things, to go out. Basically, the economy is fully halted, and it's just really bad business across the boards, anywhere from not just the cruise ships anymore and the airlines. Like, it's hitting a lot of retail stores. People are not going to the stores anymore. There's hand sanitizer shortage, all kinds of stuff. And the oil prices hitting all-time low. The interest rates are hitting all-time low. These are all really showing signs of a potential slowdown in the overall markets, the overall economy of the world, because everyone has to stay home to work. And yes, people who are salespeople and things like that are able to use Zoom media to do their things, but guess what? Joe Schmo can't go to XYZ because he canceled his trip. Now, if someone, they give the example of like someone who was planning to go to Europe for vacation now is not going because they're canceled their flights, and all the people around the hotel, the restaurants they would have potentially gone to even if they had took the dog to the kennel, all this money is just evaporating for a lot of businesses. And I believe in Italy, I haven't heard in any other states or countries, that they're putting in, if you can prove that you've lost more than 25% of revenue, you can get a low, or basically a loan or money from the government, like interest free, I think. Which is interesting too, because is it going to hit here in the United States? I don't know, but these are super red candles. So let me see if I can go back 2016. So it's not going to be the most accurate, but I don't want to go back because it's going to be a lot of scrolling and stuff like that. But do you buy this? I don't know. Like, I hate to say this, but I have to buy some. I'm going to have to buy a little bit because we're basically, I think 25% now. I think 25%. No, okay, maybe not. I thought we're 25%. We're only 17%. So actually, what I'm going to do, I'm going to put this out right here. I'm going to draw a line at 20%, which is, we're just going to call it at 27.17. So we're going to create an alert. We're going to draw a line. Oop. Doop. Oh. Okay, we can just edit this. What did I say? 15? I want this to kind of be somewhat of a floor support. It's kind of a little bit lower than it was just a year ago, basically around this time, or a little bit the summertime. So if this can hold here, so let's zoom out to like well, not monthly, let's go weekly. So we go to a weekly chart. We're basically hitting, kind of hitting this area right around here. Like I can definitely see hitting in between these two areas here. So I'm gonna put on I'm gonna move my trigger down here, and it won't let me. All right, put an alert here. So that what I'm doing is I'm gonna see. It's gonna ping me, give me alert when the markets open up, because the RSI hasn't on the weekly hit my low that I like. It's getting very close. The momentum is just absolutely terrible. The thing is about this is not a economical crisis. It's more of a overall issues. So I'm not sure how the government's going to jump in to fix this unless we have a vaccine and kind of settle the fears. Because you can't just throw money at this. We need issues or a lot of things checked. We need the vaccine working. We need economic stuff to come back. And it's going to be very difficult in the short term to see that. Again, if you're a long-term investor, which I majority am, is today is going to be a day you're buying 10 to 20% of the stocks that you wanted, and then we'll just have to go from there, because it's going to be somewhat chaotic today. It could be completely open up and everything's just hunky-dory, or everything just could be substantially lower, or we have the bounce of a century today. I don't know. I'm just telling you what I know right now, and limit down with huge red candles usually is a significant sign of we're probably going to head lower, if I had to choose a side. Guys, thank you so much for watching. Again, if you have any questions, please leave it down in the comments down below. I know this is a crazy trying time. Just sit tight. Don't trade full size. Just take it easy. Even if a cash is a position, okay? Don't feel like you have to jump in front of the train or catch a falling knife or any of this stuff. Just please be careful out there. Again, this is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.